One of our analysts yesterday, Angela Hanley, was saying, after this Golden Week holiday, it seems like this sort of pent-up demand for travel, we might be actually coming to an end after this holiday. What's your take?
Yeah, that's a big problem for policymakers, I'm afraid. So the policy consistency really matters to resume confidence, not only for consumers, but also for private sectors. So in that sense, we do think that more supportive measures will be needed. For China, for example, the policy rate cut, we now expecting, every quarter China will need to cut the policy rate until next year at least. And also, from the local government perspective, they need to spend more to support local infrastructure investment, for example, and also property, which is obviously a big problem for Chinese policymakers to fix. So currently, we've seen that the policymakers have released several rounds of demand-driven easing with the hope to at least stimulate some of the genuine demand in top-tier cities. So they have to keep the momentum going and to make sure the policy consistency.
Robin Shing from Morgan Stanley was here, I think, last week, and he talked about how they're saving maybe some of the bullets for the December work conference. Is that an expectation that you have, perhaps? And what do you think they're saving in terms of more support measures on the way?
Well, I think for now, the policy message that we've got is, at least in the very near term, they might not want to roll out additional policies, but rather to wait and see what the previous policy measures would fit through into the economy. But of course, towards the end of this year, as you said, and probably next year, we might see like a policy rate cut, as well as the property market support, which might be continuous if they really want to keep the momentum going, and infrastructure investment for local government, they might continuously issue refinancing local government bond to diffuse local government debt problems. So these are probably the measures they could continue doing.
I'm just wondering here, in terms of what we're seeing so far when it comes to the property sector. I mean, are there areas that you're seeing where the policy is actually working? Where is it not working?
I think, so if you look at the current policy stance, they want to increase household leverage for the sake of at least stabilizing the momentum, because if you compare with other countries, China's household leverage ratio is still relatively low compared with that of the US, for example, and also Australia. So there's still some room for China to manipulate, and that's why I think they've released some demand-side easing since late August. So in that sense, it might work to some extent, but of course, if you look at the policy intention this time, why China's property sector has come into a downtrend, I think a big driver behind is the policy intention to reshuffle the sector and then to explore some new way of development. Because if you look at the development sort of model in Hong Kong, it's probably not working for mainland, and that's why they want to explore some new way. And in our view, it could be the public housing will be taking the leading role after this sector reshuffle, and that would be the government-driven and public housing-driven sort of model for China to explore in the coming years.